Hi everyone, this is Zach and welcome back to the channel. Today I'm going to make a video talking about how I use order flow, specifically the footprint charts, to find precise entry locations using the concepts of trapped buyers, sellers, and basically just absorption, and how I use that as my entry criteria for my trading system. Well, before I jump into that, if you're not familiar with the style of trader I am, I recommend you watch my previous video in which I kind of give you an overview on how I find my levels, how I find my inflection areas, how I think about the market, the market philosophy I use called auction market theory. So take a look at that if you're interested in how I'm finding these levels. I'm not going to get too deep into that. So these are the levels. You can take a screenshot, reverse engineer how I got them watching the last video. We're not going to get too deep into that. Let's go to a footprint and let me give you guys a overview on what a footprint is if you're a very beginner. So a footprint is a candle chart, just like every other candle chart. But what's different about this is if you take a look at, let's see if we can, nope. If you take a look at this what this chart is displaying, this is a candle, this is a candle, it looks like that, and these are all 1 minute candles. I can change it to 5 minute, 15 minute, whatever time frame you want really. But these are candles. But what's interesting about these candles is that every unit, every tick that these candles trade, you can see the internal data, the order flow data of these candles. You can see at every single tick how much volume was conducted at 60:39 at 10:28 a.m. I can see how much buying at the bid, selling at the ask, how much total volume was being transacted. And this information can be very useful if you have some levels and you want to see how participants are interacting with those levels to build a contextual idea on how you want to interact with the market. So today at the open, let's go to a 1 minute chart and an order flow chart. Even before I do that, what this specific candle footprint chart is showing you is this side, the right side, is showing you volume traded. So every single tick is showing you how much volume was traded at each level during that 1 minute. And then the left side is showing you the bid and the ask, bid and the offer of that price point. So right here, for example, we had 161 contracts traded at the bid and 240 contracts traded at the offer or the ask. That's a total of 401. So if we take 161 plus 240, it equals 401, right? So right there, 161 plus 240 equals 401. That's the total traded. Now, if you want to see the delta, the difference, who was dominating this candle, what you do is you take the bid, which is the aggressive selling. That's the left side, the bid. So the 161. And if it's selling, it's a minus, right? So minus 161. That should be a minus. Minus 161 plus, where was it? 240. So 161 sellers added to 240 buyers. What's the difference in that? 79, right? So a total of 79 buyers, strong buying contracts, stronger in this little area, right? If we look at it from a chart that does the calculation for you, Now I call this a bid and ask footprint. You'll see it down here. And I call this one a delta footprint. It's the same information you can see, but this one just does the math for you. You know how we had 79? You don't have to do it in your head. You just look at this, 79. This is the one I use personally. A lot of people use this one as well. To each their own. I prefer this one. Same information. So what this is telling you is there's 401 contracts traded total, and of that traded price, there was 79 more aggressive participants, aggressive contracts to the buy side. Here there was 157 to the sell side, more aggressive. 259 more, 156. You could go on and on, right? Now, why is this important for us to know? Well, if there's buying, right, here, that means they're buying. It should go up, right? Correct. And if they're selling, it should go down. That's also correct. But the market isn't that simple or that easy. The way it works is that you could sell, and every time you sell something, it has to be bought by someone. And if there's someone willing to buy more than you're selling, the price will actually move up through up. It's called a passive buyer versus an aggressive seller. So if we're selling it aggressively and someone is passively just saying, anything in this area I'm willing to buy, so you're just selling into them, the price will actually move up. And your job is to spot aggressive participation and see how the market is reacting to that. So a simple rule of thumb I use is if if I'm seeing a lot of selling, right here there's a lot of selling, right here there's a lot of selling, and price is moving downwards, that selling is being rewarded. And if that selling is being rewarded, then I want to go with that selling. I want to continue playing with those sellers. But if I see selling, like right here, and the price isn't moving down, the selling isn't being rewarded, well, I'm instantly going to start thinking that's absorption. A passive buyer is beating out the aggressive sellers. Now, it's called absorption. A lot of people also call this concept, the one we're seeing right here, trapped sellers. Because if these people are aggressively selling right here, if they're not rewarded quickly, they have to get out of the market. This 157, negative 157, negative 259, they have to get out of the market eventually, right? And when they get out, their their exit liquidity will actually have an inverse effect on how they how the market moves, how they wanted the market to move. So if I'm a seller and I have to get out of my position, I have to become a buyer. So I in a way become my worst enemy, right? And the market is about finding areas in which people are overexposed to pain and where they are trapped, seeing whether or not they're actually trapped and playing against them for big moves. So a great example is today we came down into this 33 to 30 zone. You can see where I got that from. That was the LVN right here. We came into that zone, and what did we see? A bunch of trapped sellers. We saw selling hit the tape and a lot of volume kick in as well. Because look, sometimes when the market moves, look how light the volume is here, right? But there's a lot of volume being transacted here. Price isn't moving down, even though there's a lot of sellers. Instantly, I'm thinking, this is also a level I've predefined as an area of inflection. I'm seeing absorption. I'm seeing trapped sellers. This is a big clue that there's a possible reversal about to happen. So what can you do? Well, you see there's a lot of selling happening. This is a whole minute, this candle. Nothing happens. The price doesn't move outside the range of this candle. Again, at the same spot, we see more selling. Price doesn't move, right? Finally, the selling relinquishes and the buying steps in right here. And what happens? The buying gets rewarded, right? Somewhere in here, you can flip to being a buyer. So if we took this trade, we could have taken it at the flip. So let's say we take it at 32, our stop is like 29, 3 points. Let's say we take it long there. We put our stop. There. We have, I'm trying to move this so it's easier for you guys to see. Uh, well, okay, let's just say we have our entry. We have our entry right there. 32. Stop is new low of day. 1R, 2R, 3R. So you hit 2R pretty much instantly, and that's enough for me. As soon as it goes about 2R, I'm looking to de-risk the position, move to break even. So I'm at break even pretty quickly on this position had I taken it. I did not take this trade, full transparency. I'm just doing a bit of a review here. I can go over some of my trades if you guys are interested in that. Just leave a comment. And yeah, you eventually get 3 to 1 if you get 41. 3 to 1 is great risk to reward, and this is not even this isn't even the move that the market is doing. This is just a light pullback. You can see the market continues to sell hard, but because you're being so precise, because you're using order flow, because you have good levels, you're able to find really good trade location for even scalps, 3 to 1 scalps. And let's say now you do this, the market was selling all day, right? There was a lot of selling here, and we just played a bounce back. But let's say you play a continuation, right? You can go from 3 to 1 to 8 to 1 to 9 to 1 pretty easily. Not easily, but with some practice, you can definitely find moves like that in the market just about every single day, if you're going with the trend, especially. So yeah, that's just one example of a trapped seller. Another example was right here. Yeah, this is a great example as well. If we go to the market profile again, we had the multi-week balance point of control. Again, if you're curious how I got these levels, watch my other videos. I go into a lot of depth on how I find this stuff. But we have a balance point of control at 14, and the market is trading into that, and it's giving us signals right there. So again, I'm not watching the tape in the middle, but once it hits the level, I start watching the tape for a sign of a possible reversal or a sign of potential continuation, right? So let's go back to the footprint chart, and the first time they hit that level, so the first time they hit it is right there, right there. What happens when they hit it at 11 a.m.? Big seller right there. So this seller is being rewarded. This seller has been somewhat rewarded. And then the selling gets smaller, but it's still present at low of day. But now these sellers are not being rewarded, and they're at our level. They're at 14, right? Sellers, 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 sellers. This should be going down, right? Why is it popping up again? Why is it holding? The sellers are controlling the delta. You can see if you look at total volume delta, total candle delta right here, that's the second row. The sellers control the delta. Sellers control the delta. Sellers control the delta. Sellers control the delta. Price is not moving away from 14. This is your sign that the market is absorbing the price, right? Right there. Because it doesn't get better than this. You can take one of the entries, put your stop at a low of day. Maybe you get stopped out if you're a little early. That's okay. You try it again. That's why we have risk to reward. So let's say you try it there, put a new low of day stop, and they tick you out. That's okay. If you still see the absorption, try it again. An average winner is like 3 to 4R, right? So you're allowed to take a couple of attempts if you trust your analysis. So let's say you take it long here at 14. Stop is new low day. Just doing rough math here. Like if we look at this on a candlestick chart, this is 11 a.m., 11 to 11:05. It's right there. Let me look at the other one. It's right there. See, this this doesn't give you as much information as the footprint does. Why don't I put them side by side so you guys can take a closer look? Let's zoom that out a little bit. Make it look like that. Now look at that. This is this, right? Let me make it even more clear. There you go. That green zone is this right here. It's at your level. It's at the level you want to trade. It's showing you the sign of sellers, but it's not moving down. So you know the idea, the concept of absorption is possibly at play here. It's worth a shot. You're only risking like 3 points, right? Say you long, that's your stop. Let's give it even wider stop. There's 4 to 1, 5 to 1, maybe even 6 to 1. Even if it takes you 2 tries to get this, it's worth the risk, right? So yeah, these are just a few examples. I could go over some more. It doesn't really matter. What I can do for you guys is next week I'll take trades and take trades based off order flow. I always do. I just don't want to share my trades right now. But I'll share my trades next week, and I'll reverse engineer them using the order flow concepts that I used and the market profile concepts I use. It'll probably be a long video, like an hour long. But I can do that for you guys if you want. Just leave a couple comments, like the video, please. That'll be very encouraging, and yeah, I'll definitely make sure to get that type of content towards you guys. But yeah, this has just been a very quick overview, bird's eye view of how I use order flow and trap sellers and trap buyers. I hope you enjoyed. Please like and comment. Thank you.